All right. Well, I think we're going to get ready and go here because I don't like to keep the people waiting, and the rest can pick it up on the replay. So, for the benefit of our recording, we're ready to start in a couple of seconds. So,
For sure.
all right.
And guys, if anyone has questions, by the way, feel free to like raise your hand in the middle. I'm
Or
always
just even
want to
put it
keep,
in the chat. I'll be
yeah,
monitoring. So, either way.
absolutely.
And
Want to
we'll have
keep this as
time for any questions and things after. So, all right. We will let's get this started officially. Good evening, everybody, and we welcome you into our hard money webinar tonight. My name is Dave Cole. I'm the sponsor manager for REI USA, and it's my pleasure to act as your host. Max is standing by, got a great presentation lined up. Quickly, some reminders, a lot going on here at REI USA. Tomorrow, the webinar we'll have is rehabbing on a budget. On Friday, we do the Wholesaling 101 group that comes off every Friday. On Monday night coming up, Walk the Flip, flipping properties from acquisition to sale. On next Wednesday night, we'll be doing long distance real estate investing. So, those are just some of the things coming up. You can go into your REI USA calendar. You do need to sign up, just like you did for tonight. And we'll go from there. The one tomorrow night on rehabbing on a budget. That one starts also at 7 o'clock Eastern time, and it's about design tips and staging, space planning, renovations, managing your flips. And that one's taught by Lynette Fitzpatrick, who's also an REI USA Super Group leader. So, some of the things that are coming up. As we mentioned before we bring in Max, that we'll be monitoring the chat box if you've got some questions during, and I will just kind of jump in and see what we can do to get those questions answered for you. So, for tonight, there are times when hard money makes a lot of sense. Securing hard money is different from a conventional loan, and it can save weeks off the process, often the difference in making or losing a deal for you. So, Max Chera of Express Capital Partners has worked with countless investors from New York to Texas. Max used to own a brokerage, so he's been where you folks are at that are enjoying our webinar tonight. Having sold hundreds of homes, he knows the obstacles firsthand. So we welcome from Express Capital Partners, Max Chera. Max, take it away.
Thank you so much, Dave. Thank you, REI USA, for allowing me to be here tonight. It's always a pleasure to be able to engage with you guys and kind of go over some educational stuff and just talk about real estate, right? That's why we're all here. We're here to make some money. So let's talk about how securing financing and building out a scalable business works within real estate. So the first thing that I want to just say is that this is a not to be represented as legal representation or tax advice or accounting advice. This is strictly my opinion on things, and I would reach out to your attorney or accountant for more information about that. So today I want to go into give you guys a little bit of an idea of what we're going to talk about. So the first thing we're going to talk about, what is hard money? First off, just to give you guys a little sneak peek, it's not as hard as it sounds. It's actually super simple. Why we're going to use hard money, how does it work, right? What do rates and terms look like? What do lenders want to see from the borrower? And how to shop for the best hard money lender, and how to understand and calculate your deal as if you were going to use hard money to make sure that you are going to be profitable. So the first thing that we said was, what is hard money? How is it? Where did it come from? Right? So back in 2008 and 2009, we had a housing crash. Our markets were there was a lot of foreclosures. There was a lot of things going on. And what happened was there was a lot of properties available that banks just wouldn't lend on. And investors saw the opportunity. They saw, hey, I see a profit on this property. I want to get into it. And that's how hard money came around. So it's really, and why do I talk about this so much about like why hard money was created is because for those of you, right now we're in a kind of a part of the market where we're doing a lot better than most of us thought we would be doing a year ago or maybe a year and a half ago. But there's still a lot of some people that would say that the housing market's going to stay exactly where it is, and some people that feel like, hey, we might be headed towards another foreclosure area. Well, for those of you that have the feeling that there are going to be more properties available, this is the peak time where hard money is going to be an asset for you and helping you lock up a lot of those properties that you feel will come onto the market. So pretty much what happened, lenders saw the opportunity, they filled the void, and now we have programs available to help out investors to secure properties that regular lenders or banks would not lend on. So now, what is a hard money lender, right? It sounds, again, this word hard seems to scare a lot of people, but really what it is it's just based off of a hard asset, right? It's actually a super simple process, probably one of the easiest real estate loans to obtain. But it's just based off the hard asset. So we're financing your property, typically looking at your future value, right? So whenever you're coming to a hard money lender, you usually have an intention of what you want to change in the property that's going to increase the value. And we're looking at both where we are today and where we will be tomorrow. Now, keep in mind, these are also short-term projects, right? So these are usually fix and flips, fix and holds, which a lot of people will call the burst strategies nowadays. And those are two of the most typical scenarios where you would use hard money. Now, why do investors choose to use hard money? What's different about it from your typical conventional product? Well, hard money is good for those that don't have such deep pockets because it provides a very high leverage, right? We're able to provide 80, 90% of the purchase, 100% of the renovations. And the renovations is usually a big part of it because if you're just going to buy the property outright, don't forget you will have to front that. Another reason why people use hard money is because it's a numbers game. We're going to go into this in a little bit more detail, but just to explain to you what I mean by it's a numbers game is, hey, if I can make 100,000 on one property using my own funds, or I can make 80,000 on two properties using hard money, I just made $60,000 more in profit that way with the same amount of dollars. So it's a numbers game, right? The more deals I can accomplish, the more deals I can do, the more profits I can make. Leverage, 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 leverage. And I'm going to say that again, leverage, because leverage is also so important, right? A lot of the times I hear investors telling me, hey, it has a 7% cap rate, it has an 8% cap rate. But what are you making on your money? How much of your money is multiplying? And that's what we really want to look at. And then the next thing is you're working with lenders that understand the game, right? We're not working with an FHA lender who lends to a primary homeowner that plans to live in the property. You're not dealing with someone that understands cash flow. You're dealing with lenders that work with fix and flips. They work with fix and holds, and they go through these processes every day. They've done these processes maybe themselves, and now they're able to provide you with insight as well as capital to do your deals. Now, the top three reasons as far as logistics are concerned as to where the value comes in as far as hard money. The first one would be timing. Dave, you hit it on the spot when you started off. You said, hey, this is a timing game, and you're absolutely right. I've seen many situations where people forget to account for time, and they might have taken an offer that looked better at the time, right? Because maybe the interest rate was 1% lower, maybe the points was a little bit lower. But what about the process, right? Understanding the process and how that's going to help you get to your successful closing and reduce your holding cost, right? If you could reduce your holding cost by a month, you just saved $2,000, $3,000, $4,000 that you might have been scared to spend $1,000 to do, right? So timing is very crucial in when you decide on who you're going to work with. Approval criteria, right? We don't have all these guidelines. We're not institutionalized like your HSBC or Chase Bank that's going to want to see your W-2s, tax returns, and maybe even a blood sample, right? We're looking at the property itself, making sure that there is a viable exit, making sure that the borrower is able to successfully bring it to that exit, and that's what we want to see. Flexibility. There's, I'm sure some of our viewers here have completed some of their own projects, they would know that we wish that everything would go as according to plan. Unfortunately, there are always, or most of the time, there are surprises. And working with someone who's able to be flexible with you and not have to get every little thing kind of checked off could go a really long way. So how does hard money financing work? So number one is time is of essence, right? So normally when we're speaking with a borrower and they want to utilize our services, there's usually a time frame involved in there, like, hey, I want to do this, but I need to close in 2 weeks. I need to close by the end of the month or a certain date. That is something that we are able to accomplish because we have the ability to work with independent appraisers that can get out to properties within 24 hours. We have a very fast underwriting process where we understand how to look at these assets and determine right away, hey, this is a good asset, this could be a good project and show good profits. It can take us a day or two. We have borrowers that call. I had a borrower last week actually that called me up on a Monday, said, hey, Max, I have a deal, but it's only a deal if I could close on Thursday. We got the appraiser out Tuesday, got the report back Tuesday night, underwrote the file on Wednesday, and we're clear to close by Thursday. So that is something that, again, I'm not going to, please don't ask you to do that every single time, but it's something that we have the ability to do. And that gives you that ability, which now when you're dealing with your sellers and you're trying to negotiate the best possible deal, you're giving them what they want. So where does the money come from? We go ahead and do all the hard work for you. We go ahead and source our funds from private investors, from family, friends, and such, and so on and so forth, so that we can go ahead and give you guys the access to use it to make profits on your deals. What are our responsibilities, right? So as your lender, what do you look to me for, right? So underwriting and servicing the loan. Why are you looking to me to underwrite your deal? Because I'm also your second set of eyes. We're able to see certain things that can help you out, bring you insight. For example, what if you knew that there was a certain business or something that may not have been great for the neighborhood that's going to open up next door and that could have hurt your ARV? Maybe the appraisal would show it today, but not in the future. Well, if we can provide you with that and show that to you, or tell you, hey, look, you're buying this property a little bit too high because, you know, after 3 months, you're going to start going underwater. Well, we're going to give you that information, provide that for you. This way you make sure that you're only getting into deals that you know you can be profitable on. We're responsible to screening the borrowers, making sure that we're working with someone that's not going to go purchase broke in the sense, making sure that we're not putting you in a bad situation and that you can complete the deal. Evaluating the property, making sure that the rehab budget seems effective and that the ARV makes sense based off that budget. We're responsible for dispersing the funds. And this is a big one. I know that, you know, it happens to be a lot of the bigger topics regarding around the webinars as well, because it's one of the hardest parts of the flip is dealing with the contractors. Finding the money, you could find someone like myself pretty easily. There are a lot of realtors in the market. There are a lot of appraisers in the market. Contractors, for some reason, are the ones that are holding the entire deal together, because if they're able to complete the work, and not only complete the work, but in a timely fashion, so this way you're not spending a lot on your rent, on your holding cost, that's going to help make you profitable, right? So when we say we're responsible for dispersing the funds, we mean that we're responsible for keeping everyone on track on the scope of work. So when we first get the scope of work from the borrower saying, hey, this is what I plan to do to the property, this is the renovations that I plan to complete, and this is how much it's going to cost me, number one, that holds the contractor accountable to that price that he stated and said, hey, I told you it was going to cost $5,000 for the flooring, and that means it's going to cost $5,000 for the flooring. And number two is also making sure that we're not paying for anything before it's due, right? The last thing we want to do is give our contractor money that he has not completed, where if he does disappear tomorrow, and I promise you there are many situations like that, you are not put in a bad situation, right? So as long as you paid him for what's completed, I can always have somebody come in and finish off what you did not complete and give them those funds for it. And obviously collecting the monthly payments, making sure that everything is in satisfactory. So again, where is the capital deployed? So we use our funds to help you guys with the purchase and the renovation of properties, right? So why is that important? It's just to really understand that we're not here to do the soft costs like your inspections and things like that. We're here specifically for the purchase and the renovation of the property. And that renovation comes in draws, right? And that's where I was saying, where we're not going to pay the contractor for work that he has not completed yet, is important. And that's why we do the draw process. So we would pretty much, the way it works is there would be an inspector that comes out there. He looks at the property and says, oh, you said that you were painting the kitchen walls. Yes, that's done. Check that off. Great, no problem. You said you were going to replace the cabinets. I see new cabinets. Check that off. And now you say, hey, my budget for that was $1,000 and $3,000, so I'm requesting $4,000, and then you have $4,000 wired over to you within 48 hours. Interest only payments to keep the payments low. That's another thing, right? You're not doing a fully amortized mortgage where you're paying a good amount of money towards the principal as well, because your intention is to keep your overhead as low as possible so that you can get in and out of the deal and make your profits. So how do we, as a hard money lender, value and consider how much money we would lend? For those of you who are unfamiliar, we use a term in the lending space called loan to value. Loan to value stands for how much am I loaning you versus how much your value is. So for example, if I loaned somebody $100,000 on a property that was $200,000, I gave them 50% loan to value, right? So many home buyers today are required to put at least 10% down on a home purchase. So for example, on a $100,000 home, a buyer would need to bring $10,000 as the down payment and would get $90,000 from the lender. Now, keep in mind, this is not the only cost to close your deal. There are other third-party costs that come up. This is just the percentage of the purchase price that you are putting down. We are going to take into consideration two values. The first value, like I mentioned earlier, we're looking at is today and tomorrow, right? So today's value is how much are we buying the property for? And in that scenario, we're going to lend up to 90% of the purchase price and 100% of the renovations, so long that for tomorrow's value, it does not exceed 70% of that. Why do we do 70%? For multiple reasons. Number one is a lot of the times we want to make sure that you have a second exit strategy. And normally most people can refinance their properties at 70% loan to value. So that's a good way to determine that you would be able to take out our loan. Additionally, if you were to be at higher than that, your profitability probably wouldn't be that good. So we want to make sure that you're also buying the property at a discount enough to make a profit. We're going to consider the purchase, the renovation size, and the ARV. Why does renovation size matter? Well, a $30,000 renovation on a $100,000 home is very different than a $400,000 renovation on a $100,000 home, right? So where we're looking at there is, hey, has the borrower done a renovation before? Is this something that's within their realm? Do they understand this? And if they can, beautiful, no problem, it makes sense, right? So it's a lot of common sense there, and just making sure that we're putting in precautions to make sure that you're going to come out profitable. We're looking at location, right? Location matters. Sometimes you have a property that's going to sell in 2-3 days, which is one of the greatest things you could find. And then you have a property that's going to probably sit on the market for 30, 60, 90 days because of where it is. Maybe it's a rural location and properties just don't sell there as fast. So obviously, and I'm sure you guys have heard this all before, location, location, location. It's a big thing in real estate for a reason. And lastly, the experience of the borrower, which I kind of brought up a little bit beforehand, where I said, hey, we're looking at what your experiences are. If you are a contractor and you're an architect as well, and you do renovations that are of astronomical sizes, well, we understand that now, and we know that you're able to accomplish that. But if someone has never done a renovation before, they're probably not going to be able to do those tough ones right off the bat. So what do rates and terms look like when using hard money? So the length of the loan is short term. Our loans are for 12 months. It's temporary financing. The only reason that you're using the hard money is to get yourself from point A to point B, right? We don't want to stay in this for a long time. You and I both want you out of the deal as quickly as possible. Interest rates. So interest rates vary a little bit depending on the deal, the risk, and many other factors. Our interest rates right now start at 8% and go up to about 11%, depending on the deal and how much experience we have. What are origination points? Origination points are how we get paid as far as loan officers to originate your file and work with you and make sure that you're incentivizing us to actually take your file in a sense, right? So points are a percentage of the loan amount paid at the closing. Now, points can also come in the form of buy downs, right? Which means that I could buy down my rate maybe. And these are questions that you should definitely be asking to understand all your options, whatever dealing with any type of lender. Fees, there definitely are fees. You have attorney fees to draft up loan documents. There could be underwriting fees, depending on the type of deal you're doing. So again, that's another thing that you want to understand. This way you can crunch all your numbers together, which we're going to get into very soon, which is, hey, how profitable am I, what my costs are, and what do my numbers look like? Fees can also, that you do want to consider, are third-party stuff such as appraisal, wire fees, and other admin costs. Maybe you do an extra inspection. Maybe you do maybe in the area you're in Texas and there's a lot of black land and you want to make sure that your foundation is secure. Hey, you should be spending money on that to make sure that you don't have a bigger problem tomorrow. So those are other things that you should account for when you're doing a fix and flip or hard money deal. So now we said, hey, we understand now how the terms work. We know what rates look like. We know what the fees could consist of. Now, how do I understand how much I'm going to make on my deal? Well, number one is you can always just reach out to us at Express Capital Financing, and I myself or one of our loan officers will be happy to talk with you in depth about your deal and give you information based on what your profits would look like. As well as you can go on our website, and Dave, help me out here. Tell me if it shows my website right now on the screen.
Yes, it does.
Beautiful.
Links to the calculator.
Perfect. So on our website, if you go to business resources, you will see deal calculator right here where you can go to, and you could start to enter all your information such as your purchase price. I could enter my after repair value. I could enter how much I plan to borrow total, my renovation budget, how long it's going to take me to flip the property. Why is that important? How long it's going to take me to flip the property, right? We just spoke about two things. We spoke about the speed of time because there is no prepayment penalties when you're working with hard money. So if I exit the deal, let's just say, I'm going to use an easy number just so we're on the same page as far as math is concerned. Let's just say you're paying 12% interest and you completed the deal in 6 months. That's only 1% a month that you're paying. So that means that at 6 months, you paid 6% interest, right? So if you're doing a deal at 10% and you're only in the deal for 3 months, you probably paid about 2 point something or 3 point something as far as the interest rate. What the interest rate you think you would qualify for, you can reach out to us at Express Capital Financing. We'll have a 5-minute conversation, understand a little bit about you and your business and be able to provide that for you. And how many points you plan to pay at closing. Do you have mortgage tax, transfer tax? Is there maybe a mansion tax? Maybe you're doing a luxury property that requires you in a certain area to pay 1 or 2% of that value when you sell the property, right? So this will also bring it up to mind certain things that could come up that you should be accounting for when you're working on your deal to ensure that you know what your total numbers are. And then if you scroll all the way to the bottom, figure you filled in everything, it'll tell you what your total profit's going to be. It'll show you how much money you're going to have in the deal at the purchase. It's going to show you how much money you're going to have in the deal after 6 months with making interest payments, right? And that's important because especially if you're looking to buy and fix and hold, it's important to know what your total all-in cost is going to be so that when you refinance, you know, am I cashing out at this point? Am I just doing a rate in term? Or am I actually needing to bring money to the closing table and going to be down more money? Right? So these are all questions that we want to understand beforehand and underwrite before we start putting money down and before we start locking ourselves into a deal. What do hard money lenders consider when funding a property? So I think I've went over this a few times, but I'm going to give you guys the list. It's the 6 C's, right? So the first thing we're looking at is the collateral. What does the asset look like? What's the condition of the asset? Is it a complete gut renovation? Is it rentable the way it is today? Are there tenants in there today that you're going to be able to collect some rent from while you do renovations? Maybe you're going to move some of them around. You know, some people get creative. Capacity. When we mention capacity here, we're referring to the borrower, right? What capacity does the borrower have? There are many different things that people could bring to the table, which you should, again, this is where the conversation goes a long way. If someone calls us up and says, hey, Max, I'm doing this fix and flip, it probably doesn't make sense for your average borrower, but for me, it does because my cost for renovating is going to be a lot less because I'm a contractor. Great. That's amazing. That's your capacity to do that. Hey, Max, most people are going to have to pay 3% to their realtor to sell the property, but I'm a realtor. I'm only going to pay 1%. Great. That's added value that you're bringing to the deal. Show us your capacity. Show us what you're able to do and how you're going to be an asset to the deal, and that's going to help us out. Capital, we do require skin in the game, right? That's why we have the 10 or 20% down, depending on your experience level, that we'd like to see. So we want to know that you have the ability to come up with that capital to the closing table, and that we're not just talking about a deal that doesn't make sense for us. Character. On this one, really what I'm going to say is, don't make your voicemail if you're a debt collector. Please don't leave a message. That's not what we want to hear. We want to know that we're dealing with someone that's organized, a human being. They respect each other. We talk respectful to each other, and we can have a good relationship, right? Because that's what this all is. It's relationship lending. And lastly, credit. We're very not credit sensitive. There is a credit factor, obviously, to this. The credit does say a lot about a person and who they are. So the way we kind of look at it is, if you're, we want to see 680, 650, 620. If you're, let's say, never done a deal, if someone does deals all the time, they utilize their credit a lot for business and it's really hurting. Okay, we understand that, right? So we're very make sense people, but we are going to run credit. We are going to look at that and see a little bit of who you are. So let's talk now about the loan application, right? Now you're interested, you heard everything I had to say, it makes sense to you. You understand now how this is beneficial to scale your business, right? Because if we're doing one deal with hard money, it only makes sense if you don't have the cash to do it. But if you have the cash to do it, the only thing you're eliminating there is your risk, right? The value in hard money is to do this on repeat. Keep it moving. Because again, if I do 2 deals with hard money, I made more money than I did on 1 deal with all my cash. So once you start getting into that factor, you're starting to make money. So what would that look like? You call me up tomorrow, you say, Max, I want to get started. What's the next steps, right? We will have a loan application that you'll fill out. It's a simple 1-pager. We could also do it over the phone. Most of the time, that's the way it happens. We'll ask for a little bit of personal identification. You'll send in your ID. You'll send in eventually your social security number so we could run your credit. We'll ask you for the purchase agreement, right? Show us the contract so that we know exactly what we're basing it off of, when the closing date is, so we know exactly all the timelines that we have to hit. Property insurance quote. You will need to get a property insurance. Honestly, most people wait till this for the end, but it is good if you have never done a deal before. It is good to understand what that could cost you so that you could start to factor that in. And again, it doesn't hurt to make that call up front, right? I can't tell you. I had a deal actually I was looking at once in Texas. I thought it was going to be a great one. But last year they changed the floodplain on me, and now I had to be in the floodplain and pay an extra money on insurance, and it didn't make sense at that point because now my cash flow wasn't going to be as I thought it was. So reach out to your insurance agent. Most of them you could send them a text at the property and they'll send you a quote within a couple hours. Your renovation budget, your scope of work. This is, and I can't go into this enough, how important the scope of work is. This is the bread and butter of your deal, right? You're about to send this scope of work. Who's it going to? It's going to the appraiser, right? So the appraiser is about to give his opinion on his value. The appraiser doesn't know the conversation that you had with your wife, with your partner, or whoever it was about what renovations you plan to do to the property and how nice and perfect it's going to be. He just sees what you're giving him on the scope of work. So that's why it's so important to really detail, right? It's important to put down more the upgrades, the quality, what you're planning on doing to the property more than just the cost, right? Because for one person, $5,000 is another person's $10,000 renovation because it's their personal home. So the value, the dollar amount doesn't say as much as your description is. So the renovation budget goes to the appraiser. Well, goes to the appraiser so that he could properly determine the value of the future value of your property. And it also goes to us so that we could set up the draws for you and make sure that your contractor is happy and comfortable getting his payments. And the ARV appraisal, which we just mentioned, that demonstrates the potential value of the property. Once we have all this information together, you're then going to go into The underwriting process, which again, like I said earlier, can take as quick as a day if we have to, but it can usually takes about 3 to 5 days. And so pretty much once you go through underwriting, you then get a clear to close or agree to fund, as we like to call it. Once you're agreed to fund, that's when we start to schedule a closing date and make sure that everybody sets up on time, knows how much money to bring to the table. And then we wire our funds to title to make sure that everybody is covered. So in a nutshell, that is the hard money process. Like I said, it's one of the easiest loans in real estate to obtain. It's solely built to help you scale your businesses, and you can treat this as a line of credit. With Express Capital Financing, I get this question all the time. Do you provide lines of credit? Do you provide lines of credit? When people are going to actually put one together for you or structure one, they're going to charge you points on it when you haven't borrowed a dollar today. You're still going to have to go through an underwriting process. With us, you're going through that underwriting process. Once you've borrowed from us once, we're not underwriting you as the borrower anymore. Now we're just looking at the deal to make sure it's profitable because we have a relationship together, and we're never going to stop you from doing deals. So we're not sourcing our funds. So if you have your cousins that see what you're doing, your aunts, your uncles, your friends, your family members, whoever they are, and they say, wow, Kevin's doing a real good job right now, flipping properties. I want to get involved. And he did 4 properties. Now I want to give him some money to do 6 and 8. We're not going to stop you from doing that. And if you want to go to 10 and 20, beautiful. Let's keep going. Let's push, because we understand that that's where you're making your profits from. That's where your kingdom is being built. And we want to be a part of that. And if you have any questions on that, by the way, anyone could feel free to reach out. Our email is info@expresscapitalfinancing.com. They could find us on our website as well, expresscapitalfinancing.com. And we put out on our website all of our loan programs so that you can look through them, understand them. We don't just do hard money. We also do long-term mortgages for your rental properties. We also do commercial mortgages. We'll even do transactional financing if you decide that you want to wholesale a property. So we're like the Costco of real estate financing. You have a deal, you tell us what your strategy is. We'll tell you what aisle has the best program for you. And guess what? There are times where a rental mortgage might make sense for a fix and flip. Talk to us. That's the only way to find out. We'll make sure that we give you the time to understand your deal and make sure that you are putting the most money in your pocket.
Okay, but without the annual membership fee on that Costco analysis.
Exactly.
All right, Mac,
Exactly.
I actually do have 3 questions already. So I will
Beautiful.
get started, and any of the other rest of you that have, you can just enter them in the chat and we'll get them relayed. One thing I do want to mention, though, is that Max, when you were, to everybody, but Max, when you were talking about the, what a great idea it is to check with your insurance agent. One of the things that's come up, and this happened to actually an investor that I knew, where they had an apartment building and there was a fire which damaged a couple of units, but was severe enough that they actually had to evacuate the entire building to do the reconstruction. And in going through all that, it turns out that their insurance did not have the full coverage needed to cover everything. And basically, they wound up losing millions of dollars because of it. And so, because things like that happen, and there's a lot of good stories about having the right coverage, so I'm not scaring anybody off, but to mention with REI USA that on Monday, May 17th, we actually have an insurance specialist, or like a real estate or an investor insurance specialist, who's going to be covering things like that and what to look for in terms of coverage, so that it may be worth a few dollars more to have coverage for, because you don't know what all's going to happen. So I just wanted to mention that real quick.
Absolutely.
First question is, and it's, I got the gist of the question, and it's kind of a long-winded one, but it's kind of I guess I'd say the timetable. So how does an applicant determine how much to ask for? I understand there's loan to value, but it's also, let's say it's $150,000 property. They already see there's $30,000 worth of rehab to be done. And then it's the ARV is 230 or 240 or whatever it may happen to be. So it's kind of how do they get an idea of how much to ask for? Do they tell you? Do you tell them? How does that work? And then it's also a matter of, and I know this is not about a line of credit, but some investors, or if there's a proof of funds required. So if they don't have the proof of funds to go to you, how does that affect them to get the deal? So that's why I'm asking if you maybe want to cover kind of the timetable so that our members understand, here's what I've got to do and here's what I need and here's, how it goes along.
Absolutely. And these are great questions, actually, and I love them. So there are two different ways that I get approached. There's the format of, Max, I have a deal today. I just put it under contract and I want to do this deal and I don't know what my next steps are, or help me out with this. Great, no problem. And then there is the, hey, I'm looking and getting into real estate and I want to know what my next steps are to understand what my purchase power is. Which one do we think is better, right? The second way is usually better, right? Come to us first if you're unsure. If this is your first time doing a deal, come to us and say, hey, Max, I'm looking to get pre-approved. I want to understand what I'm capable of doing with Express Capital Financing. What is Express Capital Financing willing to lend me? And we'll give you some guidance on what to look for. Right now, I can't go ahead and tell you on every single deal, this is what it's going to look like, because every deal, and you could probably attest to this, Dave, no two deals are ever the same.
Right.
There's something different with every deal, right? So now where does that come into account? There's two values, again, there's two percentages that we're going to offer you. The first one is how much on the purchase that we're going to give you. So for example, if you're someone with, let's say 5 deals experience, we're going to say, hey, we're going to give you 90% of the purchase price and 100% of the renovations, right? As long as it fits within 70% of the ARV. Great. So now when I'm doing my numbers, if I know my property is going to sell for $100,000, I know my max loan amount is $70,000 because I'm only allowed to go up to 70% of that. Now, in addition to that, I know that my purchase price is only $80,000 and I qualify for 10% down, which means I could ask Max for an $8,000 down payment, which would be $72,000 loan amount. Great, that makes sense, right? That's how you're able to come up with these numbers and understand them, right? And now additionally, if we come to us the first time and say, hey, this is what I'm looking to do, can you please help me get pre-approved, help me pre-qualify so that I know what I can do, and start presenting these offers and show that I not only am I going to sellers now and saying, hey, I'm willing to buy your property and close in 2 weeks, saying, hey, I'm willing to close your property in 2 weeks and here's verification that I can close, right? And that's the big difference. We're willing to give you those pre-approval letters. We're willing to work with you because we want you to get those deals. My goal is to help you in every way negotiate that deal. Even though I'm just your lender, I'm not your realtor, but I want to help you negotiate that deal to the best terms possible. I have times where people will reach out to me and say, hey, Max, these are the numbers that I'm seeing. I don't think I'm profitable. What do you think I should do? Well, let's take a look at them. We'll break them apart and say, hey, look, I think really this is your max offer price. I don't think you should go above this number. And they'll go ahead and renegotiate. Sometimes we'll even come up with some brainstorming ideas and decide how to do it.
Okay, appreciate that. And actually, the second question was answered
Sure.
in that answer, so that's good. The other one is, and you touched on it, but as far as the types of investment properties that you will look at. So is it single family, multifamily, but with REI USA, some of our members are into self-storage or mobile home parks, that type of thing. So what is it the amount? Is it the type of property? And also, are there any geographic considerations? Because we do now have more members around the country.
Absolutely. I want to see actually if I have this I used to have this in the presentation. Let me just see if it's still here. Oh, nope. Okay. So we offer a couple of different programs. We are, for hard money, we focus on residential properties mostly. That's our bread and butter. That's our favorite asset type when it comes to hard money, because we're able to underwrite those the simplest. And also they are most common for what we're seeing. As far as commercial properties, we will do commercial, though the loan amounts go up now because we want to see when you're taking a risk like that, we want to see a bigger return in a sense. And it doesn't make sense sometimes these lower values because when you can have a small change in percentage change a deal that much, it's a lot more risky. So we do, when it comes to hard money, we'll do 1 to 4 units, 1 to 100 units, as long as it's residential, doesn't matter. We're doing mixed use as well. We want to see with mixed use that a 250 minimum loan amount instead of 100,000 minimum loan amount, to give you guys an idea of what that looks like. We prefer the commercial to be rented and mostly work being done to the residential side. For those investors that are very experienced, they're doing self-storages, they're doing maybe even warehouse or some other different asset classes. We will look at those. We prefer usually about 500,000 to $1 million plus once you start getting into commercial outside of multifamily. Multifamily, we want to see about 500,000 plus. And then when it comes to mortgages, we are as open as it gets. If you tell me you have a deal, it's cash flowing, it makes sense, we will fund it. We do mobile home parks. We don't fund the mobile homes though. We only fund the rental for the pads when it comes to mobile home parks. We'll do self-storages. I've actually had a couple of Stacy's students reach out to us, so that was real awesome. Thank you for that. And all different types of commercial assets as well. There are different programs, obviously, so reach out. And all these programs, by the way, are listed on our website. If you go there, you'll see loan programs. You have fix and flip. That's specifically for 1 to 4s. Then you have the multifamily / mixed use program. Then you have the commercial mortgages, residential mortgages, bank rate mortgages, right? So our goal here is to make sure that we're saving you as much money as possible on your financing.
Okay, appreciate that, Max. And just as a thought, and we'll wait and see if anybody else has any questions. This was something that happened with me. Well, it was obviously more than a year ago, but back in the days of in-person meetings and presentations for investors. And so I, having been to a presentation, kind of understanding where hard money fits in. So I was talking with an investor saying that, oh, hard money, that I was looking at a deal, I couldn't get the financing for it. So I went to hard money and it would have cost me $10,000 more to get it. And I said, okay, so what did you do? He said, well, I wasn't going to do that. And I said, okay, without the 10,000, how much were you standing to make? And he said, well, whatever it was, 35,000. And so I said, okay, so by not taking the hard money loan, you would have made 25,000 instead of 35,000, but by not taking it, you made zero after all your research to find that property. And
absolutely.
It's like, then the light bulb went on with him. Yeah, I didn't look at it that way. And so that's just a thought for you. And I think that goes back to, that's kind of where my initial point in the introduction came from, Max, is about that. And I wonder if there's, maybe some, resources or just something to help investors be able to say, and yeah, if they can get the conventional loan and do with the people they have relationships with, that's great. But to look at, just consider hard money as an option pretty much every time. I wondered if you've run into something along those lines.
100%. I run into that all the time, literally every day. Most of the time, when I first speak to somebody, hard money, they hear hard and they're like, no, I'd rather not. But once we start going into numbers and they start to understand what it actually is and how it works for them, all of a sudden now the whole dynamic of the conversation changes. If we have a couple extra minutes, actually, I'd love to show you guys something on numbers. Do you see this Excel sheet here?
Yeah, right now I'm seeing your information, but yeah, I'd love to do that. And we still have everybody, looks like everybody's still with us. So yeah, let's go for it.
Beautiful. So I'm going to, do you see it now?
Yes, we do. The Excel, the spreadsheet. Yes.
Perfect. Okay, great. So I'm just going to take whatever deal, honestly, I was looking at beforehand, just to show you guys something, right? So let's just say now, for example, that same borrower came to you, right? And he said, Dave, I'm going to do this deal on my own. I don't have to worry about, a lender, and I can make my money. And you say, sure, no problem, right? So let's say he was buying it for $535. He was selling it for $950. He borrowed $0 on it, put $121,000 in renovation for it. And it takes him 9 months to complete the project. And he's not paying any interest, even though it says an interest rate here. Because if we look at, where is it? Interest, it shows zero because there's no loan amount. There's no points because there's no loan amount. So all this is irrelevant right now. It's just to show it to you. He would make $236,000, 780. And that's a 35% cash on cash return. Now let's take the borrower that said, you know what? I'm going to take the deal. I'm going to take 90% of the purchase, and I'm going to take 100% of the renovation. And now I want to do this deal. What happened? His profit went down. There's no question about it. There is zero questions about that because there is now a cost that never existed before. But look at his cash on cash return, right? It went from 35 to 117%. That means that your money now more than doubled for you. You risked less money of yours. You were able to have someone come in, take that risk for you. You now can take your other money diversified into another deal. And again, if you did another deal and instead of making 236,000, you made 165 times 2, you just made $330,000. You beat your first deal on just your second deal. So now imagine if you could take that and put it amongst 3, 4, or 5 deals, right? I only need $90,000 to complete this deal right now with hard money, as opposed to $666,000. How many deals could I fit? I could fit 5 deals in there, 6 deals in there.
Right. And your banker's not going to go through this with you either.
No, they will not. They will not.
Okay. Good deal. All right. Literally, I guess. So, all right. It looks like we are good. Our attendees are still here, but hopefully we've satisfied everyone. So we're going to wrap this one up. Max, Chera, we thank you on behalf of REI USA for all the help and the input, and we'll get you on another webinar here later on this year, see how the feedback is, and they've got your contact information, so let's do it. All right.
Looking forward to it, Dave. Thank you guys so much for having me, and have a wonderful rest of your night.
All right. Thanks to everyone. You have a good one.
You too.